Have you ever wondered how insurance companies decide whether to insure something or not, or how they determine the premium you have to pay? The answer lies in a critical process known as underwriting and risk assessment. Imagine a company, let's call it TechGuard. TechGuard is a firm that specializes in providing insurance coverage for high-tech startups. One day, a potential client, a new startup that specializes in AI technology, approaches TechGuard for insurance coverage. The underwriting process begins. TechGuard's underwriters start by gathering as much information as they can about the AI startup. They look into the company's financials, its management team, its business model, and its technology. They also look at the startup's risk factors. This could include anything from the company's debt load to the potential legal risks associated with its AI technology. The underwriters then use this information to assess the risk of insuring the startup. They ask questions like, how likely is it that this company will face a significant financial loss? What would be the potential cost of such a loss? And how does this risk compare to other startups in the high-tech industry? Based on their risk assessment, the underwriters at TechGuard then decide whether to offer insurance coverage to the startup and at what premium. If the risk is too high, they may decide not to offer coverage. If the risk is moderate, they may offer coverage but at a higher premium. And if the risk is relatively low, they may offer coverage at a lower premium. This case study of TechGuard and the AI startup illustrates the critical role that underwriting and risk assessment play in the insurance industry. It's a complex process that requires a deep understanding of the insured entity and the potential risks it faces. To summarize, underwriting and risk assessment are crucial processes that determine whether an insurance company will provide coverage and at what cost. Underwriting involves gathering and analyzing detailed information about a potential client. Risk assessment, on the other hand, involves evaluating the potential risks associated with insuring that client. These processes help insurance companies manage their risks and ensure that they can cover the costs of any claims that they may have to pay out. They also help clients understand the risks they face and the costs associated with insuring against those risks. So, the next time you wonder about the workings of an insurance premium, remember the intricate process of underwriting and risk assessment that shapes the decision. It's not just about numbers, it's about understanding risk and making informed decisions.